Welcome, Real Estate Hustlers podcast. I'm your host, Josh Appleman. Today we're joined with Anita Wong. She's a trailblazing GP and founder of Give Rise Capital and SARE Ladies, empowering women embracing Asian American identity and redefining remote leadership in real estate. Anita, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Thanks for the intro. I'm CEO of Give Rise Capital and mainly really operating in Dallas Fort Worth as a GP, lead GP, 158 units, 37 million asset under management. And I also run a group called SARE Ladies. CRE is also fine, but it stands for Subtle Asian Real Estate. And we're a 25,000 member group that is primarily for API real estate investors nationwide. And I run the ladies version of that. So I'm really passionate about seeing more people that look like me and diversity in the real estate space, especially in commercial.
Okay, API, what does that stand for?
Asian American Pacific Islander, so AAPI.
Okay.
Yes.
Got it. Very cool. Very cool. Now, did you start the group, or was it started and you joined and built it? Helped build it?
Yeah, so it was actually a group that was started as a meme group. It was kind of just a funny story that way. But there's these things, called like subtle Asian, and there's something else is usually tagged onto it. So it could be like subtle Asian rock climbing or these things like that, right? And my two partners, Annie and Nelson, they started it during COVID, and they just really picked up. And then I was able to meet them in process of that, and told them like, hey, if you want to do more for women, and they said yes. And that's pretty much how the journey has been, and that's been 3 or 4 years at this point now.
Got it. Very cool. Well, let's get into to how you got into real estate. Let's talk about your first deal, and then what made you take the leap into real estate and building your career.
Sure. I've been a lover of cities and buildings my whole life. I mean, my grandfather was an architect. I went also down the architect route too. I studied architecture at USC and Southern California, and then I was also kind of interested in business. I was in a business fraternity, and USC has a great business school as well. And I was just kind of trying to find something to invest in. I first said, I wanted to start learning about stocks, and my parents were like, "You don't know anything about stocks. You should invest in something you know." So buildings was basically that, and they helped me with purchasing my first single family. I think this was in Irvine, California, so just like a really great school area, and just it was a new build. It was very simple, and then I started kind of house hacking and kind of built a portfolio from there. And so while I was working at architecture firms, I was living there sometimes with friends, and then just started building those single family portfolio, and then into Airbnbs, small multifamily, and mostly in the last year, really been working for 3 years altogether, but the acquisitions really have come in the last year on large multifamily, 75 units plus.
Let's talk about how you found your first deal, how you funded your first deal, just all the steps, the in between stuff.
Yeah, you're talking about single family, or you're talking about the large multifamily stuff?
Your single families are the base hits that win games. So your base hits add up to your big wins. So talk
Yeah,
about
that's
the
true.
how you got out there and started getting it going, building up steam.
Yeah, I was fortunate. My parents did have some, understanding of real estate, but I think it was also it was also kind of rooted in what they knew, right? So, I think that, we found a good realtor in the area that I was working in, and they helped me kind of cross that finish line and, purchase that property. I think what I realized from that time, that I was, kind of on the move. I was too young to kind of stick in the same place. And so I really wanted to learn more about it and scale and try other things. And then my first large multifamily, however, I'll tell the story of that. But I was thinking about doing multifamily. I started learning it from this woman. Her name is Hua Win. She's a great syndicator based out in Dallas, and she and I had connected through the SARE community. And I started learning about and reflecting to her the frustrations I had from having too many single families, which was just, you just run out of capital at some point, right? It's just The numbers are they're okay. They weren't something that I was interested in, but it was just a lot of work, a lot of tenant, a lot of maintenance. And so multifamily came into the spotlight. And then I just started attending as many conferences as much as I could. And people said, "Oh, you need to find a guru. You need to find someone to mentor you, and that's how you get into multifamily." And then I had picked a guru. I kind of took some time and really found that person. And then another guy from my SARE group said, "No, no, 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 don't go over there. Why don't you learn with me? I'll give you my classes for free and just join me." And his name is Tony Lin, and who is now my partner for multifamily. So anyway, I joined him. His group is called Linfinity, and he is more of an operator, but really I think we jived because we shared a lot of that same background. I think that I saw my own ethos, my own identity in the way that he operated, and so when he taught me, we went through a class, and then he's like, "Hey, why don't you join me out in Dallas? I'm actually going to go look at some properties." And all we did was just sit in a car together. We toured the neighborhoods. He showed me like just like the weirdest things I never even thought about. We looked at trash bins at like 2 a.m. We looked at ACs that had that were caged. We like there were so many things that I had never that was in plain sight that I never saw, and I think that opened my eyes to the way that he saw things. And from there we built a partnership, helped secure a my first deal as lead GP with him, which is a 72 unit Class C in Irving, Texas. And then now we just closed on an 82 unit Class A 2 weeks ago. So
Nice. So, I mean, and now it's starting to compound. You learned the ropes, learned lingo, learned what to look for, and found it. How do you find the deal, the 70 unit?
So this is, mainly through Tony. I think, I'm sure many people on this podcast know, but it's very hard to get your first deal without knowing someone that's already in it.
Mhm.
I would say, I had on my podcast a broker from Marcus and Millichap, and another lender that we use, Old Capital Lending. And then we were saying how I would say in the Dallas Fort Worth market, you're basically looking at 4 to 6 people, 4 to 6 groups that does 80 or 90% of the deals in all of Dallas Fort Worth. And how do you get in front of these people? Because that's all that matters. Because if you're just Joe Schmo coming in from, California, God knows where, but, like they'll give you a deal, but it's not the best deal. Like they're going to give you the stuff that all the last pickings
Leftovers.
of. Yes, yeah,
Mhm.
exactly. The leftovers. And so, obviously, it depends on the market, but most of the time these don't pencil out for most people. So the only way to really get into it is really to find someone that you can essentially ride their coattails in, and they're receiving the deals before it comes on market. It's they're having personal conversations with the brokers. They're like they're already looking at the deals months ahead of you are. And the reputation of surety of close cannot be understated.
Yeah.
It cannot. With Tony's reputation, I sat on those coattails, and luckily he has closed on all of his properties. And so by that measure alone, I mean, we've saved, I don't know, like thousands and thousands of dollars. We were never, a lot of times we were never even the highest bidder. A lot of times, there were some barriers that might have jeopardized the closing, but because of the reputation, we really made it work with all the different partners. So I can't understate how important finding someone that has a good reputation in the market really makes or breaks your career as a syndicator.
Yeah, and you didn't just go pick a guru who's speaking the lingo and making it sound good, and then good luck. You picked somebody who's actively pursuing deals, closing deals, operating deals, and probably going full cycle on deals too. Would have to be. And then
Yeah.
are you all bringing, you all are bringing in capital partners as well, correct?
Yeah, yeah. But I think in my perspective, I feel like you have to be both. You have to be operators and syndicators, which I think has been the shift in the last maybe, 3 years. I would say a lot of the syndicators that were just capital raisers are kind of, losing their shirts and their
Yeah.
Rolodexes based on deals that have gone south because they have maybe had scaled too quickly, don't know what's going on in the property, and lost all the equity on the deal. And so why would people invest again? And they've gone quiet. So I think those are things to really watch for. Like, don't just look at the numbers, look at the reputation. How much volume are the syndicators are really doing at that time? Is that sustainable? Because if your deal comes in jeopardy and they're looking to their other portfolios, is your deal going to get rescued, right?
Mhm. Yeah, yeah, and an operator's actually out there, boots on the ground, and really seeing the business plan through to the end, versus a syndicator who's putting the business plan in the property manager's hand and saying, "Here, hopefully we can get this done." So there's two different type of people you're dealing with. Operator takes control, gets it done. Syndicator passes the baton and of course manages the plan at a distance, but you still have someone executing the plan at a property level, which is there's a difference there.
Mhm.
Property, are you all managing your own properties or passing the baton to a property manager?
I'm a very active manager, but we do have a regional that is on the ground, and also have a partner that is local to Dallas, so that they are always there. So I kind of find it a combination of both.
Yeah. Yeah, and as long as you can work in combination, be a part of the property management team, because they're still hiring people. So it's no matter what, you can't get away from the people deal. It's you're just putting somebody in front of you to still hire the people to execute on the plan. And
Hmm.
one of the biggest failures to business plans is a result of the people and the pillars. It's not having the right people, not having, and a lot of these syndicators in the past 3 years, they've failed because they bought too high, overspent, and then they put the business plan in a property management's hands that may or may not have grew too fast as well. So it's common, and then you have interest rates. So it's a combination of a lot of different things at once. But
Yeah,
yeah,
and also feel about property managers, you really have to understand their motivations, right? It's understand their business plan and what motivates them, right? For me, I feel like having done residential and single family for some time, I do feel like uh, for property managers, it's about butts and seats. It's a not, it's their metrics are, how is it full, right? They and it really doesn't always isn't always in line with your motivations and what you are finding value, because you're looking for quality tenants, you're looking for all that stuff. And also, like, oftentimes they're not saving you the money on the repairs. Like, they're not looking through line by line. They care that it's repaired, that maybe the tenants are satisfied with the repairs, that or their response. But typically they'll just, sometimes they'll just find whoever to get the repair done, and not really look at your operational costs.
right, they're spending your dollar instead of operators may be able to save. And if you're saving 20%, you just made 20% on your dollar. No matter what way
Mhm.
you look at it, if you're buying stuff, if you're buying your renovation, uh, let's say fixtures through Amazon versus Home Depot, and you're able to save $40 per fixture, you're making a return just by being procuring the material at a better price, and that's a part
Mhm.
of being a good operator on holistically. Uh, Compound that with labor cost. If you're able to procure your labor at a different rate, it all goes into the bucket versus somebody else who's spending that money for you and they don't have a vested interest. It all adds up. The biggest piece I think is operations, and then KPIs, making sure that the work orders are handled in a timely manner, and making sure that the property is being ran efficiently. Occupancy is one thing, and then you've got rent rates, you've got market rate, you've got subsidies. How are your properties being filled?
It really depends, and I'm also learning in a way. It's about my class C's don't operate the same way as class A's, right? I think it's obvious. It seems, a little obvious, but my class C's are in almost entirely Hispanic communities. And it's very old fashioned. It's just word of mouth. And I think what I've been discovering in this last year is that about how important culture plays into filling occupancy in this way. Because I feel like I sometimes attribute my class C property like they're kind of like scared deer, like you don't want to approach to like you don't want to make any sudden noises. You want to approach with careful consideration. I think that when I'm in California, I buy in Texas, people have this perception that it's like, oh, like California's going to come in, wipe out, like you don't do all these renovations and then charge, a bunch of money for these units. And some, frankly, some people move out before the perceived damage is even done, right? So anyway, so we take very careful consideration about what we're doing on a unit renovation and who we're inviting into the community. Because for me, I'm learning that in the Hispanic community, I feel like when one unit moves out, they move out in troves. So 5, 6, 7, they all move out because they're all tied. They're all tied together as a family.
Yeah, but they're still family oriented too. A lot of times, if you go in there and you get out the bad actors, i.e., drug dealers, they would appreciate that. Plus, putting capital into the property, showing exterior renovations, interior renovations. The good ones that see changes typically stay. Now, are they going to be deterred about possible rent increases? You got to communicate. You got to say what the plans are for the community and the brighter side of things, especially if that's a part of your plan, the value add, creating value if something's distressed or deferred maintenance is being built up. That's usually where the deal's made, anyways. But no, I agree. It's all about your demographic, your target demographic, how you're wanting to keep it occupied, and then release to execute on your plan. Let's talk about a little bit about how you're operating from California and then buying in Texas. 'Cause that's good.
Yeah, so I have actually when I first got into Texas, I purchased a single family there myself. I kind of thoroughly believe in testing the market in some way. Some people, purchase they may like test the market being like LPs on different deals, but I like to purchase just single families because I like to get to know, the just on a very broad level, just like the weather difference or the issues that affect a certain area versus California, right? And so when I got into Texas, I was hit hard with the foundation issues, the plumbing, the hails the size of golf balls. Like those are things that you really had to kind of dive into first. And so when I got into sorry, I got swept into my single family one. Can you repeat the question, actually?
Being an operator from California,
Oh yes, how to get that?
yeah, and managing a property in Texas.
Yes, yes, yes. And of course, I think I mentioned that I have boots on the ground that helps with managing the day to day. But I fly to Texas every month. I'm always there. I'm always looking at it, but I make a concerted effort to stay in California because, frankly, it's easier to raise capital from here.
Interesting.
And so like if I mean I'm sure there's plenty of wealth in Dallas, but I would say a 100K investment is a very different conversation than 100K investment from California to Texas.
Mhm.
So we purposely we stay here, and then we just go every month and really stay on top of things in Dallas and constantly looking for hunting for new acquisitions, looking at our properties. That's what we do.
What kind of systems are you using to help with the asset management, help make sure that you guys are on track?
Yeah, I like Resman. Resman's my
Yeah,
favorite. Yeah, I think. I guess it's the only one I've used, but I've never really had a problem with it. But I'm just plugging to it every day. Yeah.
got it. Yeah, there's one at Hello Data. It really just comps out the properties surrounding your property, make sure rents are on track, make sure that you're not leaving money on the table, and compared to the other properties, or just undercutting each other and driving a race to the
Mm-hmm.
bottom. But It's good for AI, and it compares pictures that we've seen from different amenities. But and then we use Appfolio with a little bit of an AI stack. What's your take on AI with multifamily and in general?
Yeah, I mean it's a constant conversation. I mean, we also use Cashflow Portal to do our underwriting, which was it's been a really interesting thing because, I like for us to look at deals, we want to be making sure we're looking at a certain volume or a certain volume has to cross our desk so that we can get into another acquisition quick. And so we still use our old fashioned, like Excel sheet, way of underwriting, but we use Cashflow Portal AI, which kind of helps just takes the data from an OM and just plugs it in, gives you a general idea. And I think it's been really, really helpful to just kind of cross reference some of our numbers and kind of help look at things that we're not seeing.
That's pretty cool. Yeah, and I'm the old fashioned plug it into the Excel and play with the numbers, see what works, see what breaks, and see how far you can go until it does break. But that if it's extracting data from the OL, that helps. That helps curve a lot of time. 'Cause,
Yeah, I'll also another one that I can't remember the name of the AI too, but it helps you read through a AOM, like lots all the financials even, and helps you basically just dump it into one summary. And so I was like, this is great, and it at least like helps you kind of like move things faster. Not to say that it should replace your general understanding or your base knowledge of it, but it's a good way to
yeah,
if you're busy to kind of look at more deals.
yeah. I'll always ask for guidance, and then of course back the napkin. If we're even close, then I'll go into the daunting task of underwriting. 'Cause it's just, but if you can plug everything
Mhm.
into cash flow portal, it's already there, and it helps. I mean, you could underwrite a lot more deals to
Mhm.
see what the numbers could play like. That's cool. Okay, good deal. All right, very cool. With your experience, what would you say you wish you knew then, what you know now, just by learning lessons?
Mm. Um, I think uh I think when I think I guess I still feel fairly early I feel early in the whole process, but um I think what I wish I jumped on earlier was just to kind of just to get into the minds of people early, coming to Dallas, being in your market, pressing the flesh, as they say, is the only way to kind of get it done. So I think I wish I kind of got that done earlier. Just come here, get in front of people. Like no matter how often you're coming here, I think it's always worth the time to do so. And I also, I'm already feeling now, but 0 to 1 is the hardest by bar none.
Yeah.
1 to 2, everything will fly afterwards. And I feel like I'm already feeling the pain of it. But I had an advice from a mentor about when you're getting started, assume that you have 1,000 units. And like begin looking at your processes as if you already have that many, because it'll sneak up on you really really quick, right? And so we doubled our portfolio in about 6 months, and already having to relieve some of our control over the different properties. I think now we're kind of scattering partners across different properties. There's some pros and cons to it, but like what is it going to look like when you have another 500, 600 units? Are you still going to do your first property good?
Yeah, and you don't know what you don't know. That's the part. That's the journey there. And having a mentor helps, but it's firsthand experience. That's what drives wisdom too. So it's all a part of it, though. And multifamily is extremely scalable. There's proven systems, proven methods that are used and easily tapped into for resources and plugged into for your business models.
Yeah,
So
I'll have one more actually that I wish I did earlier was about the capital raising portion, right? I think that was the biggest barrier for still a lot of people. People feel like I don't know, at least in my circles, I feel like they are more scared of asking people, their friends and family, for money than operating or putting their time and energy into managing a property. And I think in this market, I almost think that you can't function without being able to raise some money, in my opinion. because it's so hard for everyone. You almost nod off, like it almost doesn't matter how good of an operator you are, I mean, unless you're very good. But like it is about how much capital you're raising, and the only way to do that is to get in front of people early, about getting coffee with people, understanding like maybe how much money they're able to invest, and begin the conversation that you're in multifamily now, you have real estate knowledge, and communicating that early, so then when the deal strikes, then you have a semblance or an idea about how much capital that you can draw in order to get the deal done.
Yeah, yeah. Then you've got certainty again, certainty of closing. Now you've got the confidence you can go and you can execute, and even having some backup avenues too, in case your capital sources don't come through. You might have to pull out your own balance sheet and get it done. Just get it to the finish line and raise afterwards if you need to. It's a beautiful thing about real estate. It's still there. You know where the money's going. You know where it's at. It's in bricks, and you can deploy different methods. So, one quick question: why Dallas out of all the markets?
Mm. I feel like I learned early on that um, if you are, I think a lot of people start by looking at markets, and then honestly, they get stuck because they have a lot of different markets, a lot of different availability, and they get an analysis paralysis. So I say Dallas Fort Worth found me because I actually learned this from, let's see, someone from Cashflow Portal as well. But don't follow the market, follow the operator. And so when I found my mentor, he was already in Dallas Fort Worth, and it was kind of a natural step for us to go there. And the reason being is that if you have a good operator, they will find the markets for you, because it's almost a moot point for you to look into a market without the relationship, because again, you're not going to be finding the deals regardless, because you're not part of that club of 6 people that is doing 80% of the deals. So it found me, because, and then it found my mentor already had the partnerships with everything in place. And for multifamily, you have to have all your pieces already in order before you're submitting an LOI. You're submitting a proposal to purchase a property. It's not like residential in that way. So it found me.
Very cool. Awesome. Very cool. Anita, definitely appreciate your time today. If somebody wants to reach out, learn more about yourself, possibly invest with you, how can they get a hold of you?
Yeah, you can find me on my website as giverisecapital.com, or you can find me at Anita at giverisecapital.com.
Awesome, Anita. Definitely appreciate it. Look forward to following.